Hi, this is Charlie. Picture this. You stroll into the bank feeling like $1,000,000 until they start typing away on their computers, making you feel like you're under some secret investigation. What's going on behind that screen? Well, it all comes down to two numbers. These two numbers decide whether you're living in your dream home or stuck Googling how to build a house out of shipping containers. And here's the kicker. They don't care who you are. Old, young, male, female, black, brown, or white. Those numbers have zero time for your life story. Let me introduce you to the stars of this financial reality show, your credit score and your debt-to-income ratio, DTI. Your credit score is like that friend who's always watching and keeping score. You miss a payment, they remember. You max out your credit card, they take notes. They're petty like that. Ranging from 300 to 850, this little number sums up your entire credit history in a neat package for lenders to judge you with.
Then, there's your debt-to-income ratio. DTI is basically a balancing act, like trying to carry all your grocery bags in one trip. It's a measure of how much debt you're juggling compared to how much cash you're bringing in. If your DTI is too high, lenders start getting twitchy, wondering if you're one missed paycheck away from begging for a payment plan.
Together, these numbers determine if you're borrowing for a shiny new car or a less glamorous bus pass.
Now here's where the drama comes in.
If your credit score tanks or your DTI creeps up, it's game over for that dream vacation.
And these numbers are ruthless.
They don't care that your dog ate your rent check, or that your cousin's wedding put you $5,000 in the hole. Those centerpieces were not worth it. Once your score drops, it's like a bad rumor spreading through high school.
It sticks.
Your DTI doesn't have much sympathy either.
You get that fancy new credit card for the points, but now your balance is creeping up. And suddenly your income isn't looking so hot compared to all the debt you're racking up.
Now you've got lenders giving you the side eye, thinking, can this person really afford that loan?
But here's the silver lining. Your credit score and DTI can be managed. Like getting back on track after too many Friday night takeouts, you can clean up your financial habits.
Want to build up your credit score? Start with the basics. Pay your bills on time. No one likes that friend who always says, "I'll get you back," but never does. The same applies to your creditors. Keep your promises.
Next, try to keep your credit card balances low. Lenders like to see that you're using less than 30% of your available credit. They like restraint, not recklessness.
And check your credit report regularly, because let's be honest, credit bureaus make mistakes. You don't want to suffer because someone else fat-fingered your name.
On the DTI side, the goal is to pay down that debt. No one's saying you have to live off instant noodles, but tightening up the budget and paying off high-interest debt first can help.
Maybe pick up a side gig if that works for you. Just don't blow it all on some random gadget you'll forget about next week.
Here's your game plan. Pay everything on time. Even if it's the minimum, just do it. Don't max out your credit cards. Pretend your credit limit is way lower than it is.
Check your credit report. Make sure no one's messing with your score. Pay off high-interest debt. Kill off that credit card balance like it's your worst enemy. Don't go overboard with new credit cards. You don't need every single one. These numbers don't care who you are. They only care about how you handle your finances. But if you play the game right, you'll keep those two numbers in your favor. And that's how you win. Subscribe and follow.